everyone, welcome to our vlog. Today we're going to discuss about accounting cycle for merchandising business. Okay, ladies and gentlemen, first is merchandising business. This is business of organization that engage buying and selling. Next is merchandise inventory. We have two types of merchandise inventory. First is the beginning and the end. Okay, what will happen in the merchandise inventory at the beginning? So, goods are available at the start of the accounting period, but in the merchandise inventory end, it is goods are available or remain unsold at the end of the accounting period.
Second is merchandise. Goods or article acquired by the business that are intended for sale and merchandise inventories include only food and intended for sale business operation. For example, office supplies for sale are inventories for National Bookstore, but office supplies for accounting for merchandising business. The merchandising business uses special account to record the buying and selling of merchandise or goods for sales. Special merchandise accounts. There are the special accounts. There are accounting for sales. Have a sale return and allowances, sales discount and freight out. And account for purchases have a purchase return, purchase discount, and freight aid.
Okay, next is the accounting cycle of merchandising business in sales is income account used to record sales of merchandise, credit to record increase, and debit to record. And then next is sales return and allowances used to record the amount of goods and returned by the buyer. It is reduces the amount of sales and debit to record increase and credit to record decrease. It is evidenced by the assurance of a credit.
And next is sales discount. Sales discount is discount granted by the seller to encourage early payment of the buyers, then decreases the amount of sales. And then the freight out. Freight out is freight charges or cost on delivery the product for the buyer's place paid by the seller. And then the terms of sales. 2/10 and 3 n/30. And 2/10 is a discount of 2% is deducted from the invoice price if paid within 10 days from date of sale. A gross invoice price is to be paid if payment is made after the discount period. Then, account should be paid in 30 days from date of sale. And then, the COD or cash on delivery. The invoice price is to be paid upon delivery of the product. Then, terms of sales. EOM. EOM is end of month. This account should be paid on or before the end of the month of sale. Then, 2/10 EOM n/60. 2/10 is 2% discount is given if the customer pays by the 10th of the month the following the month of sale. Beyond this period, the full amount must be paid within 60 days from the date of sale. And there's one, shipping charges on merchandise sold or purchased. The buyer and seller must agree on who is responsible for paying any freight or charges and who bears the
Okay, next is the free terms. It is FOB or FOB shipping. It is free on board at point of origin. And the buyer pays for freight in or transportation. The buyer debit freight in, and for this, the buyer assume the as in loss of goods while in transit. And the next is FOB destination. And free on board up to destination, that is FOB destination. The seller pays for fit in or transportation. The seller assume the rest of loss hold the good on a transit. Then next is the seller debit freight out is deliver expense account for this. Next is the chart of account. We all know what is chart of account here. Okay. List of account title used in recording business transaction and arranged in the Alpine order, or what we call asset liabilities. That is that. And next is chart of account merchandise business, and it is have an example. It is example of transaction involving of sales of merchandise. And here we go on the screen. Reading. Chart of accounts. Act number 11 cash, 12 accounts receivable, 12A allowance for bad debts, 13 notes receivable, 14 interest receivable, 15 merchandise inventory, 16 store equipment, 16A accumulated depreciation or store equipment, 17 store furniture and fixture, 17A accumulated depreciation, store furniture and fixture, 21 accounts payable, 22 notes payable, 23 interest payable, 31 Adrian Flores Capital, 32 Adrian Flores Drawing, 33 Revenue and Expense Summary, 41 sales, 42 sales discount, 43 sales return and allowances, 51 purchases, 52 purchase return and allowances, 53 purchase discount, 54 freight in, 61 rent expense, 62 salary expense, 63 bad debts expense, 64 depreciation expense, it is a store equipment. 65 depreciation expense, it is a store furniture and fixture. 66 miscellaneous selling expense, 71 interest income, and last 81 interest expense.
Next, accounting for purchases. Purchases, it means goods both the purpose of resale without any changes in the physical form. Debited when goods are acquired on cost basis or on account. Next is purchase returns and allowances. It is used to record the goods returned by the buyer to the seller. This is usually happens because the goods are faulty or damaged. Decreases the cost of goods both credit for increases and debit for decreases. And in purchase discounts is used to record amount of discounts granted by the seller. Decrease the cost of goods both.
And the next is discount. We all know what is discount. It is a reduction in the original price of goods. And there are two types of discount. It is a cash discount and a trade discount. Cash discount is a reduction price to encourage a customer to pay immediately. And the trade discount is a reduction from the published price granted to dealer or wholesaler for buying big quantities or for result patronizing the buyer. Example of transaction involving purchase of merchandise. The following transaction took place during the month of January 2009. January 16, AB Enterprise bought shoes, slippers, and handbags from their Marikina suppliers amounting to 95,000 under the purchase terms of 2/10 and over 30. It was agreed between buyer and supplier that as freight into transaction from Marikina to Makati amounting to 5,000 is to paid by the buyer AB Enterprises. And the next is January 5, ABC Corporation returned the detective merchandise amounting to 500 pesos. 6 sold merchandise to various customers, 13,000 paid freight charges amount to 400 pesos. 12 received full payment from ABC Corporation and 13 sold an office table for 1,000 COD. And next is January 17. AV Enterprises received deliveries of handbags from Celine amounting to 20,000. Term COD 18. AB Enterprises ordered and received delivery from Manel Shoes costing 35,000. Terms N over 30. 19 AB Enterprises paid to the Marikina supplier the 95,000 pesos less 2% discount. See January 16. The buyer AB Enterprises found some defective goods and made complaint to Celine. Supplier Celine agreed to refund 1,200 and promptly paid this amount to AB Enterprises. Accounting for trade discount. Trade discount and less price are not shown in the discount or either the buyer or the seller. From the point of view of the buyer, only the net price paid recorded in the books. From the point of view of the seller, the price received from the buyer is recorded in the books. Thank you for listening. Don't forget to subscribe to my channel, Faith JL Babanto. And don't forget to hit like.